Hey y'all, welcome back to Money Mondays, where we're learning about all things personal finance in simple, easy to understand videos. In today's episode, we're going to cover itemized deductions, what they are, what they do, and who they benefit the most. Now, we all know that we have to pay taxes, but we don't all understand how the tax code works. What I'd like to do in this video is cover just some really basic foundational concepts so that we can better understand where itemized deductions apply in this scenario and why they can be beneficial. So, for starters, we have to pay taxes on all of our gross income. And in the most simplified way that I can make this, just think of gross income as every single penny that comes through into your pocket based off of work that you do, okay? So you generate income, you get paid, and that gets added up to be your gross income. Now, technically, you should pay taxes on every single penny that you earn. However, that wouldn't be very beneficial to the government because paying taxes on every penny does not encourage spending. So in our tax code, we have certain deductions that have been applied or that are allowed that kind of encourage the American people to conduct certain types of spending. It might be to buy a home or start a business, things of that nature that can help to keep the economy moving and thriving and doing well. So that brings us to our itemized deductions. There's actually two types of deductions that will lower your gross income and thus lower how much you owe the IRS in taxes. There's what's called above the line deductions, and then there are itemized deductions or below the line. So above the line, I'm not going to get into in this video, but they get deducted from your gross income first, and then that creates what's called your adjusted gross income. Now, adjusted gross income is important for itemized deductions because some of the itemized deductions can only be taken if the amount that you're trying to deduct is greater than a certain percentage of your adjusted gross income. So that's why I wanted to touch very briefly on above the line deductions so that you understood that there are some deductions that are applied that reduce the gross income down to an amount that is then called the adjusted gross income. And then based off that amount, we are able to claim itemized deductions and reduce the income even more, okay? So, with itemized deductions, you actually have one of two options. You can choose to add up all the different types of potential deductions that you can make and claim those and deduct those from your adjusted gross income, or you can take what's called the standard deduction. Yes, so in the tax code, there is a set amount of money that the IRS has created, and this number is consistently being adjusted. It actually has recently gone up over the last couple of years. So this standard deduction is an amount that anyone can claim if they don't want to go through the hassle of adding up their potential itemized deductions. Now, for the 2020 tax year, the standard deductions are as follows. For single and married filing separately, the standard deduction is $12,400. For married filing jointly, it's $24,800. And for head of household, it's $18,650. Now, what's really neat about the standard deduction is that you can stop right here. You don't have to bust out your calculator, pull out a receipt, or figure out anything. You can choose to take the standard deduction based on your filing status and subtract that from your adjusted gross income. That will reduce your overall amount that the IRS will acknowledge that you brought in as income and thus reduce the amount that you would owe in taxes. And that's it, you would be done. Now, if you think for some reason that the expenses that you had over the course of the taxable year exceeded this standard deduction amount, that is when you want to look into itemizing your deductions. Now, not every expense can be itemized, but if you know what the categories are, you can track them over the course of the year in your budget tracker, and that will help give you a running total so that you know at an immediate glance by the end of the year whether you're going to pursue itemizing your deductions or just taking the standard deduction. So that's what I'd like to cover today. I want to go over the different categories of itemized deductions so that you know what to look out for over the course of this year, so that you can do a quick glance at the end of the year and know whether or not you have exceeded the standard deduction amount. All right, so let's take a look at these categories. If you were going to file your taxes by paper, you would fill out a Schedule A form to calculate your itemized deductions. When you e-file, the software program just simply asks you the specific questions that are necessary, and then it fills out a digital Schedule A form for you. So let's go ahead and take a look at the Schedule A form so we can see what the different categories are that qualify for itemized deductions. So listed on the Schedule A form, we see that the types of expenses that can be itemized are medical expenses, taxes that you pay, interest that you pay, gifts to charity, casualty and theft losses, and other itemized deductions. Because the standard deduction amount has continued to go up, what you'll find is that the typical person who would be most interested in itemizing their deductions most likely is going to be in a higher tax bracket where they would have a higher amount of expenses. I mean, if you think about it, as a single person, you would have to have over $12,400 worth of expenses in these categories alone just to be able to say that you wanted to itemize over taking the standard deduction. So does this mean that you're doomed to being crouched over a calculator and crunching numbers off of crumpled up receipts just to figure out if you need to itemize or take the standard deduction? No, not at all. Luckily, there are some pretty easy ways for you to be able to quickly decide whether or not itemizing is going to be worth your time. For starters, you know that the standard deduction amount is a fairly high number. So you know that you're going to have to be dealing with pretty high expenses to even be able to qualify for itemizing. Now, if you look at the different categories that we see here, within medical expenses, you can think right off the bat, was there any type of major medical emergency that I had to shell out money for last year that would have been 4 figures or more? If there's a comma in it, then that's going to be most likely something that you want to look at and think, okay, I might need to be itemizing. So if you're in the $1,000 plus range in medical expenses, then you want to keep that in the back of your mind thinking, okay, we may be on our way to actually itemizing. With regards to taxes paid, if you own a home, then you can count your property taxes. Now, for a lot of people, property taxes can be $1,000 or more a year. So again, we're in the 4-figure range, and that is something you want to keep in mind when you think about, are we getting closer to the $12,000, $24,000, or $18,000 mark, right? Based on your filing status. Now, the next area that would most likely ring up the most amount of money for you would be the interest category. And this is especially true if you are a homeowner, because you are able to deduct all mortgage interest payments. So if you own a home and your mortgage balance is even $250,000 or $300,000, then it's very likely, depending on your interest rate, that the interest that you paid over the course of the year can easily exceed over $10,000. So just in mortgage interest payments alone, you are very close to exceeding the standard deduction amount if that amount doesn't exceed it on its own based on the value of your home. So just on a high level, if you are a homeowner, odds are you probably want to lean towards itemizing your deductions. It's very likely that you're going to be able to exceed the deduction amount, particularly if you are filing single or head of household. Now, the next area that could potentially have cost you a lot of money is the casualty and theft losses. If there was a natural disaster or a federally declared disaster in your area, then you can claim casualty and theft losses. Here's a list of the types of losses that qualify for this category. So if you know that something like that happened to you and you had extensive expenses, then again, you may be leaning more towards the itemized deduction side of filing your taxes. The last area that, depending on your giving style, this could be easily for you the area that determines that you go over the standard deduction amount, or it may not be that big of an area for you. But giving to charity can possibly exceed the standard deduction amount quite easily, particularly if you are a faith-based giver and you believe in tithing 10% of your income. Well, if you make $100,000 a year, then your charity donations alone are going to be $10,000. And so right there, you've nearly exceeded the single or married filing separately standard deduction amount. So you know what your expenses look like. You know which of these areas are likely going to be the highest for you. And if your biggest area or your most expensive area doesn't even come close to your standard deduction, then you may just want to go ahead and decide, hey, I'm going to take the standard deduction. There's no need in pulling out receipts and combing through bank statements in order to see if itemizing works. The last thing that I want to touch on briefly is that the medical expenses, the charity giving, and even the casualty and theft losses can be contingent on your adjusted gross income. So medical expenses particularly have to exceed 7.5% of your adjusted gross income. So even if you did accrue, 4 figures in medical expenses, but that amount is not greater than 7.5% of the adjusted gross income, then you're not going to be able to apply it towards your overall itemized deduction amount. For charity gift giving, if you like to give with cash or check, then there can be some limitations on how much you're allowed to give and what percent of your adjusted gross income you're allowed to give. So, the IRS website has instructions and more detailed information on exactly how this applies. And then also when you e-file, they'll ask you the necessary questions and it'll do that type of calculation. But just know that there can be some limitations on how much you're able to deduct for charitable giving if you give with cash, and how much you're able to deduct with medical expenses if it doesn't exceed 7.5%. And then the casualty and theft loss, I know that there's been some limitations on how much you can give, and it was based on a percentage of your adjusted gross income, but there have been some tax changes over the course of this taxable year. So I read in some places that was removed, but then on the 2020 IRS instruction form that I read, it was still there. So I'm not going to speak on that either way. The point is, I just want to let you know that itemized deductions can be contingent on how much it is in relation to the adjusted gross income. So, you may be limited in what you can deduct there if each one of those categories don't meet what they need to meet. Okay, so that's all I wanted to cover for this video. I wanted to keep it very simple, very basic. So I hope you found some value in what you heard today, and maybe you picked up another tip or trick on how to quickly assess whether or not to itemize your deductions or take that standard deduction. Let me know in the comments below if you do keep a budget over the course of the year, and if your budget has these categories already built in so that you have these numbers ready to go. Or do you keep a budget and you never thought about creating these categories and now this is something you'd like to do? Or do you not have a budget and that's something you want to make happen for 2021? Let me know in the comments below. I love sharing ideas and seeing what other people are doing. I'm always trying to learn and grow myself on how to find better ways to do things. So that's what this community is all about. Thanks so much for joining me today, and I will see you next Monday.